Looking macro speaking, when it comes to the Kenyan economy, we've just heard that Kenya's overall fiscal deficit tripled to 1.8% of GDP in the first half of the 2009-2010 fiscal year. I mean, just how much of concern is this for you?
Well, I'd actually say it's not a concern. It's in some ways a good result, if you want to put it that way, because the actual forecast for the year is something like a 4% deficit. So only sitting at 1.8% tells you that they actually haven't spent as much as they wanted to. And what the press release told us is also that it's really in development expenditure, so infrastructure spending, where there's been just a lack of absorption capacity. They have not been able to spend as much as they wanted to, and as a consequence, the deficit has come out at only 1.8% of GDP instead of even larger.
Also to bear in mind here is that most economies are sitting with a deficit to actually spur on economic growth to start off with. And Kenya is certainly making strides when it comes to growth. We see on the agri front that Kenya has overtaken Sri Lanka to become the #1 tea exporter in the world. Clearly, those are positives.
It is a positive. I mean, it's a positive. I mean, from the deficit, because it's in terms of debt issuance, debt has grown a lot, and it just means that the debt has sort of stayed sustainable. From a growth perspective, they have spent a reasonable amount of money, and as a consequence the deficit has widened, but we're also seeing the improved rainfalls, which has led to better tea production. Hopefully it'll lead to a better long rain or a big harvest, the harvest planting season, which starts in April, May. Hopefully the rains will continue through the year so that we can actually see a good maize harvest this year. And keep in mind that it's such a low base from maize production in Kenya. And then also tourism. I mean, that's a big sector for Kenya. As global growth kicks in, we already saw last year that tourism arrivals had picked up. We hadn't seen it massively come through in tourism earnings yet, but that might be a price effect. But as we go through 2010, one would expect, as global growth kicks up, spending power will improve, and therefore tourism receipts will.
And that clearly then will provide support for the shilling in terms of inflows into the country. But to bear in mind here is that forex reserves have seen somewhat of a decline since December. So are you anticipating CBK intervention buying dollars there?
Well, the interesting thing about the declining foreign exchange reserves is that it's more a case, I think, of revaluation. Because if you overlay that with what we've got on the chart there with sterling dollar, keep in mind that they've got lots of sterling in their portfolio, and the sterling has been very weak. So I think a lot of the decline that we've seen since December is really related to a revaluation, and we haven't heard a lot of anecdotal evidence that the CBK has been active in the recent months, which means that it is possible that at some stage they come in and they start rebuying dollars, but I don't think the timing is right now, because at this stage they've got to look at food imports, maize imports, because remember they are still short of maize in the current scenario, so they need to bring in maize. And so I don't think they have the room at this stage to buy. But the important thing is that they've breached their statutory. Remember, they were below the statutory minimum level of 4 months of import cover, and they're now above that, so they don't have that pressing need to buy reserves at this stage.
Well, in the meantime, the 6-month TB yield, dropped slightly, even if it was undersubscribed. Some saying that the undersubscription is a sign of dissatisfaction from the market with the auction method, for one, and then on the other hand, the general trends in rates as well. What's your view there?
Well, as the chart shows, the 6-month rate has really dropped below the central bank rate, and when we looked at what the last MPC said, and we've spoken about this before, that they're now going to start focusing on lending rates, because we've seen the treasury bill yields decline, right? But I don't think that there's much more scope for T-bill yields to decline. Clearly, the central bank feels it's fine. They want to focus on lending rates. I think what we've seen now is this 6.6 type area on the 6-month rate is very close to the low. I don't see it going much further.
Leon, let's leave that discussion there. Let's get into some insight of the market movement we're seeing now with Steve Biko, Director of the Hidalgo Group of Companies. Steve, good morning, and thanks so much for joining us. Well, some saying we've got the NSE targeting 3,620. Do you see us breaking that and then pushing through to 4,000?
The market's demeanor has actually been interesting the last couple of days, coupled with the fact that the finance sector has been releasing very impressive results, contrary to what many analysts, including I, had actually thought. We've seen Barclays posting very good results. We've looked at the overall banking sector. We've seen that the profits have actually gone up. However, I tend to disagree with other analysts saying that the market, the stock market is actually looking at breaking through 3,600 and looking at 4,000, because one, the market is still maturing, and at the moment, the factors that actually determine how the market goes up or down are all human sentiment and current affairs. And at the moment, we're seeing that the current political situation However, despite the fact that foreign investors have shown increased interest at the market, what happens in Parliament when it opens today, and how issues like the motion of no confidence against the Prime Minister, and how the other issues like the impunity issues in the free primary education scandals are actually handled is going to determine how the market goes. Because at the end of the day, we're yet to mature to a level whereby we're determined, or the market actually grows on fundamental issues.
Well, we're certainly seeing a lot of sentiment, as you say, driving things, especially with earnings reports trickling into the market. Yesterday, we saw, despite its move lower, co-op activity seeming to be thriving over the last couple of sessions. What's the market anticipating ahead of its announcement?
The cooperative bank share is actually an interesting bit because, one, it has a lot of interest from the local ordinary investor, given the fact that it's one branch that seems to identify with the other, with the microfinance sector through the circles. And given how it's been performing, especially with the aspect of supply and demand, we've seen that the demand for it has actually been higher than the supply. So this is one of the issues that actually seen it actually doing better. Not necessarily because of what the result is actually going to post, or the current affairs, but the key issue at the moment at the market is the balancing act between the issues for supply and demand.
Well, the company's announced its foray into southern Sudan as well. What have you made of its regional plan at a time when so many other players in the Kenyan market are following through with that same kind of strategy?
I think the strategy for Cooperative Bank has actually been impressive. While banks like Equity and Kenya Commercial Bank have actually been getting into other regional markets, we've seen Cooperative Bank actually improving its infrastructure and products and services for the local market. We've seen it strengthening its partnerships and strategic alliances with other circles, and it's actually foray into the Southern Sudan market is actually crucial because we're seeing the Southern Sudan market actually growing in terms of needing products and services from Kenya, and most of the cooperative and circles actually producing these products actually looking at through the bank to see an avenue whereby they can be able to sell their products. So we're seeing the bank moving slowly on its expansion strategy, but being able to move firmly in terms of key strategic products and partnerships relevant to its growth.